Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome to the Risk Intel podcast. Joining me today is Robin Greenlee, Chief Risk Officer at MapleMark Bank. Welcome, Robin.
Thank you. Good to be here.
Robin, you bring more than 20 years of credit risk leadership experience at your prior bank, which culminated in a successful sale in 2018, at which point then you moved on and joined MapleMark Bank, still concentrating in the credit space, before pivoting into the CRO seat about 2 years ago. And I'm excited to dig into this last part of your journey, the more recent part here. In our prior conversation, we talked a bit about what you found when you walked in the door at a bank that was growing from under $1 billion to over $1 billion in assets, and the nascent risk management program that was just kind of getting stood up at the time. I'm interested today in digging into that a little bit and talking a bit about the next chapter. And what happens when you look into scaling and evolving that risk program. So let's go back to kind of that period of after you've gotten that enterprise risk management system stood up. What are the first use cases that you tackled, or the first problems that you solved at that point in time before you really leaned into scaling it?
Well, I think one of the initial problems was making the reporting process a consistent effort that people are confident and prepared to contribute to. And that did have its own inherent challenges. One of them being that it's not something you do every day. And so when you go away for a quarter and come back and have to remember, oh, where do I go and do this? And where is all my information and all of those kind of things. And so finding a way to standardize things to a certain degree while still maintaining the idea that this is a growing process. This is a part of our strategic approach to life, evolving life in the bank. How do we kind of marry that, given that it's not a routine, but we need to have some standardization, if you will, some kind of a blueprint or a framework that everyone can feel comfortable using. And so, well, I'm a process person from of old, and so did a lot of training in my day. And so I feel like one of the best things that you can do to give that confidence and engage a consistent process is to give a really good procedure to people that they can easily go back to. And so documents, your compliance officers want you to write everything down and save it and all that kind of stuff. Well, there's a good reason for that, because somebody needs to come along in the background and be able to pick up and do the task when you can't do it, or when they haven't done it in a while. They need to be able to come back to that and feel comfortable and confident doing it. Otherwise, they will avoid it, right? You avoid the task that you don't feel comfortable doing. And so I am really an advocate of finding ways. Each organizational leader should make it a point of documenting your procedure. It's the last thing that anybody wants to do, to sit down and write a procedure, but extremely important. And the fact that we're using a platform allows us to include visuals, so we know what we're clicking on and what that looks like and all those kind of things. You can include those references in your training materials. But invariably, and I'm sure that my colleagues out there listening have the same problem, that your managers come back and I can't find so-and-so. How do you do this? How do you do that? And having something documented that they can immediately go to and reference will make their life a little bit easier. And it's kind of a pain when you have to call and ask that same question yet again. And all of that kind of stuff. That doesn't make people feel confident and comfortable and eager to contribute to the conversation. So One of the things that I think is extremely important is to take the time to build your procedure out and document it so that even if it changes over time, and procedure documents should be living documents anyway, but keep that information readily available. We have chosen to use a lot of the Microsoft tools, and they have the notebook function in them, and that has proven to be an easily accessible and useful tool for providing that kind of reference material, easily accessible on our internal intranet. But there are all kinds of ways to do it. You can put it in a Word document. You can, put it on your intranet internally, whatever tool you choose to use. But your specific instance of your platform, no matter what kind of training materials are provided by the vendor, your instance is going to be unique. And if it looks different than the training book, it's going to be hard for them to find what they need. So simple, easy is wherever you can possibly do that is an extremely important way to engage with your team members that need to contribute to the process.
I think that observation, that especially when someone is not engaged in an activity on a consistent basis, but yet you do want a consistent output, keeping it as simple and easy as possible, certainly well documented and having that procedure in place, but anything you can do to keep the procedure itself simple and easy, certainly getting access to the material simple and easy as well is absolutely key.
And that in itself is actually a method of controls that you use in other aspects of the bank, right? So, or any organization, doing something consistently the same way every time so that you know where to look to go get the thing, whatever it is that you have to do. So you can footnote your financials properly and all of this, because we do, we approve the grade change the same way every single time and all of those kind of things. So, but truthfully, the best way to get that process to happen on an ongoing basis, when you've got that gap, you've got to have some reference there. So I think that training and documented reference is a strategic must, in any activity that you're doing, but particularly with the stuff that people are maybe not as excited to do.
Yeah. You also, we've talked about in the past, the fact that there is in many of these risk-related conversations, they're heavily quantitative in nature. And so in order to achieve consistency, that's even more important in a qualitative situation, because otherwise you do end up comparing apples to oranges. And so if you can really explain the logic, the methodology, right, the decision-making process, you have a fighting chance of being able then to compare, right, apples to apples, period over period, and actually see a trend and have trends actually mean something.
Yeah, and I think trends are extremely important and useful, particularly when you are doing a task like this. I'm a fan of some of the trend reports in SRA versus just this single instance reports for the current period, because I am going to have much more engagement and logic to be able to answer my question today of what's my risk rating on so-and-so, when I can see what did I think the last 3 quarters. And that also means that I can hand off a task to someone else coming into a role, or we're passing it on to someone else. If they can see that information and have the history contributes to the present, obviously. So but if I can't see it, it doesn't help me to do that task. So it will help us to be consistent, and also then to have substantive conversations about, well, is it time to change the way we're doing this? And that's one of the conversations that I'm having now as we're looking at growing and scaling and adjusting our platform to meet our needs more effectively. One of the comments I had mentioned in our last talk was that we had such a heavily populated platform. Once we got it going, there were so many data points and so many qualitatives and so forth that it was very dilute. And so if any one risk element changed significantly, it was really hard to push it enough to make it show that difference. If I needed a red flag to show up for pandemic, because yeah, red flag, but I couldn't make the risk numbers push it far enough because there were too many other elements in the pool. So making judicious decisions about how to pull some of that out and simplify appropriately and judiciously. But that again is one of those issues where we need to work consultatively with our functional teams and managers to get their input. Where is the emphasis? What is the most important issue, or which elements are the ones you're leaning on, your best red flags? From the credit world, most practitioners will tell you that your best and most obvious indicator of credit quality is their pay history. So you look at the past dues. And so let's look at that. If everything else, all things being equal, you've got 50 data points, but that's the one that tells you the most information, then that's the one that we can look at quickly and move on to the next issue. So let's build our platform to meet that need. And now in hindsight, as I look back in our adoption process, I realized after the fact that we overdid it in our effort to try and be good students and make an A and get all of our stuff in there. We put too much in our environment. And so I now would encourage other adopters that they would be willing to tread more slowly. There's a sort of internal pressure as well as, sometimes a regulatory or auditory pressure to get it built and in a hurry and have a lot of stuff out there. But if you can't use it, that is sort of defeating the purpose. And if it doesn't really tell a story, if you can't interpret it, you're not really doing yourself any favors at the end of the day. So the time it may take to build a more thoughtful platform is may benefit the organization and later on, rather than having to then go back and start, figuring out what do we get rid of, and not deconstruct the whole shebang. Because now in doing that, I'm finding that, of course, quarter over quarter, my reports are not apples to apples because I've made changes in it. Now, there are changes I had to make, but I have to, kind of keep that in my mind when I'm looking at the results and when I'm talking about them.
That makes sense. All right. So spending the time up front to get yourself pointed the right direction, and keeping things as streamlined as possible. Can you point to, if you look back and you talked about training and process and procedures, were there any early wins that you realized when you were adopting a platform that you felt really helped to drive excitement or momentum or deliver value, that you would say this really helped us accelerate?
Gosh, tough question. I think that if I were looking at from let's say a regulatory standpoint and what my regulators are expecting to see or responding to, initially the fact that a bank our size was doing this level of construction on our ERM framework was definitely a win. That we would adopt a platform, and we really did try to make some substance out of it and use the reporting on a routine basis. They were, I think, complimentary of that. They initially, they could easily see where we had put more initial work, which was in our credit space, which was partly because I was in that role and I had already built a ERM framework. I wasn't in charge of that framework at my previous bank, but I had contributed the credit piece of that in my previous institution. And while it was just a spreadsheet, it was at least familiar territory. So I kind of had some running, I was ahead of the game a little bit in doing it in a platform scenario. So from the regulators, they liked what they saw there. And I think it's been useful as a communication tool with our internal auditors to help, they're looking at the landscape of preparing to audit. But I think probably what I would consider one of the big wins for me in our organization is going back to something I mentioned last time of engaging in that interview process with our line leaders and managers, which I don't do with everyone, but I tried to, who am I going to get much more bandwidth out of in just going and meeting with them for 30 minutes to talk about this stuff rather than handing them a platform and filling out a bunch of stuff. And that, I think, resulted in what I think is a good ongoing process that I'll be able to get the highest and the best out of them and still be a respecter of their time, and they'll therefore be a respecter of the process. But also building an orientation into our new managers as they come on board. And this becomes one of those things that we talk about early in their tenure so that we can go ahead and get people engaged. And as I've met with our team members, particularly those new team members that are working with the platform, using it as a discussion for, are these the right points? Do we need to change some of these things that we're reporting on? Do we need to include more or less? Is there even a report for that, whatever it is?
Right.
That, and it's amazing how many times I think I've run across that very issue of we grabbed a bunch of data points. Oh, that's a good one. That's a good one. That's a good one. You see those things out in articles and, something from the Fed and a speech from FDIC and all that kind of business. All the popular kids are doing it. And we grab all of that junk and throw it out there. And then you go back to your team and they're like, where do we get that from? And so we've kind of reverse engineered, and that I think is a cautionary tale. Much better to start with, what are you guys looking at right now, and what are the warning bells in your environment? What's your strategy, and what do we need to be watching? Where are your which baskets are you putting all your eggs in that we need to be watching? And so using that as a much better approach to our process. And that doesn't mean we eliminate everything that they may not be focusing on, but it helps us to then prioritize, helps us to better, tighter frame. Exactly.
Yeah, you've introduced, I think, an answer to one of my follow-up questions, which was going to be around scale, and it seems like by taking that process of interviewing stakeholders and having those one-on-one conversations, and now embedding that in the onboarding process and orientation process for new managers or new leaders, you're actually creating an inherent mechanism to scale the risk program and to scale the platform, because you've got that ongoing feedback loop. You have a mechanism to continuously evolve and change and update where necessary, and also to bring new people into the mix when they arrive on the scene.
Yeah, and I would say not only scaling, but also the a maintenance approach, so that the legacy continues, if you will. No one is going to stay in the same role forever, probably. And so with that, we, create means of making this a part of the environment, a part of the culture, and involve different people in the process. And so if that's one of the things you learned in your, first 30 days of joining the organization, is this is one of the things we do as part of your orientation, then you're going to be more likely to also build that into that person that you're training to, follow up and take that role as you move forward. Or if you hand it off to a staff person who's, saying, give me more, making that a something that it can perpetuate itself, because the environment for risk management is not shrinking, it's growing. And the expectations for our response to it is growing. Regardless of who your regulator is, you're expecting more and more and more observation and attentiveness to, how are you responding to these risks? How are you identifying these risks? And how do we get all of this into one place, and then all of us be able to get around the table and talk about it? So having a tool is important, and having a good tool is even more important. But if you don't have a good means of contributing to that tool and the information that we're bringing together, then it might as well be sitting out on the curb. Does it really?
Right. So you talked there about a vision for an environment where risk management grows as the bank grows, right? In this case, right, the regulatory environment is growing and evolving. Expand on that a little bit, if you would, and what that growth of risk management means, and how it plays off versus the bank's strategy. We've talked a lot in the past about strategy and risk being two sides of the same coin. So can you talk a little bit about how risk management grows and how that then intersects with bank strategy?
Yeah, I think, one of the things that we always will bring into the conversation when we're looking at the potential for a new product or a new service, or maybe a new software or whatever we're contemplating as an organization, one of the first things you have to entertain is what are the risks associated with employing that? Does it have compliance requirements? Does it have, is there reputational risk? Do they have the ability to have a longevity, so that we don't implement this thing and then they go out of business a few months later, and what in the world do we do now? All of those kinds of issues that you ask when you are considering something new in your business is heavily geared toward risk management. And so risk should be part of that conversation. Again, it should, one of the challenges, I think, is, again, that attitude of risk being the traffic cop just stopping you from doing all the fun stuff.
Right.
But really what, I think, and this is, sort of a word to my colleagues, that it is incumbent upon us to initiate that approach to strategy. We should be insinuating ourselves into the strategic discussion from the very beginning, and collaborating with our colleagues, not from a standpoint of, oh, you can't do that, but from, okay, how can we do that? And what do we need to be mindful of? And it's the same with, these ongoing discussions of our existing activities, getting the current risk temperature, and, how we're managing to that risk in our quarterly risk assessment, our annual risk assessments. But also that should be part of our culture from a strategic point of view. We should be part of this strategic planning process. And if the risk manager is not contributing to the strategic planning process, then something's probably going to be missed, like the cost of implementing necessary compliance to go with that new product or that new service or whatever it might be. So there's inherent value in for the elements of the bank that are trying to grow new opportunities and so forth to engage with risk. But if the risk managers aren't also initiating that and going to the line, they don't have a reciprocal, a conduit for discussion. And that will then tend to make, I think, the environment and the conversations more adversarial, but they don't have to be. We're their support team, we're their helpers to achieve what they want to with their strategy. And we want the bank to be successful as well. And we don't want to incur unnecessary costs associated with risk. So if we can highlight those and plan for them and or reduce them, that the only way we can do that is to have those discussions early on. So we should be initiating those conversations and reaching out. I've gotten so much benefit, I think, from being able to take the time to do that with my colleagues within other areas of the bank, because I learn a ton from them. And no one can be, know everything and be the whole source of all knowledge. So being able to engage with one another and get all that we need, as much information as possible to respond and be successful, that's going to be a huge benefit to the risk officer as well as to the sales officer, the front line, and the marketing team and the outreach team. Everyone will be able to benefit as a group if we can all come to the table and have those conversations. But we should think about it as this is all strategy. All that strategy is how do we do something? And we decide what we want to do, and then we find a way to do it. And the way that you do stuff, which things you choose to do, and the way you choose to do them inherently must include a risk management conversation. So we just need to be sure that we're placing ourselves in that room and not assume that we will be invited because you have to.
That is a great, I think, capstone message there, Robin. We covered a lot of ground here around how to scale a risk management program and a risk management and a risk framework. And so I appreciate that. I captured 5 or 6 really key points that I think will be great lessons for many folks out there listening today. Taking the time to build a good procedure, right from the get-go. Number 2, making it simple and easy. Number 3, ensuring repeatability because you've got this simple and easy framework in place. That's going to allow you to have a consistent application of that methodology.
Say repeatability, and immediately I think fiducia. So all of my friends out there dealing with fiducia, that's absolutely. That's it.
Attached at the hip there. Building this into your onboarding and orientation process, and then that ties into the maintenance of the risk program itself, and then this final capstone point of really injecting risk into the strategy conversation. And I loved your observation there that this is all strategy, right? That which things we do and how we do them must include risk management in that conversation. So getting involved early, right? Getting that risk officer a seat at the table, right? Being in the front row, not in the back row. That's going to drive the overall success of the business. So thank you for sharing these thoughts, Robin. Incredibly valuable. Greatly appreciate the time, and look forward to having you back on a future episode.
Thanks so much. Really enjoyed it.